What's up, guys? As promised, here it is. I'm going to be covering everything in this video. Pretty much the complete thesis on AMC squeezing, the meme basket squeezing GameStop, GameStop AMC, the current situation with the market, the positioning of the market, which is very bullish, macro tracking, micro tracking, indicators, all of it. So with that being said, not to waste too much time, let's just jump right into the video. And we're going to start off with S&P 500. We're going to start off with SPY, which is bullish, very bullish. And I've been tracking this for a very long time now. The symmetry on the bottoming action on SPY from all-time highs right here. Coming down, the descending broadening wedge, coming up on the other side, tracking the symmetry of this. I've been tracking this for a very long time. This is, tracking the symmetry of SPY here since the beginning of the year. March 2023 here, already tracking the symmetry, diamond bottom. Here was the descending broadening wedge, which we broke out of, retested right in March. And, here it is updated. The symmetry has played out perfectly. From that chart that I just showed you from the beginning of the year, where we were right here, until today, the symmetry of this move is absolutely perfect. So here's all-time highs on the S&P 500 right here. Here's coming down the descending broadening wedge, and here is your bottom. So the blue box is the middle. I'm going to cover the symmetry again here. So the blue box is the middle, your lowest low. You also have one break above this trend here at 418. Coming into the red, you're rejecting 418 pretty much on the dot, coming down, breaking below this horizontal line at 380 on both sides. So you break below here, you break below here. A little bit lower on the left because this was the support of the descending broadening wedge. From that point, you bounce up to 418 on the dot on both sides where you reject. Come down to 380 on the dot on both sides in the green now where you find a bounce. And then from there starts to climb up to 460 on both sides. You got this move at 430, 3 touches on it before you break through. Right above that is the cup and handle. That brings you to 460 and then your rejection at 460. The downtrend back to the trend at 418, which is a retest. It's perfectly symmetrical, but it's also a macro retest. This trend at 418, SPY rejected time and time again. One here, here, over and over, just rejecting 418. Here was the support, ascending triangle, bullish pattern, the breakout, and now retesting back at 418. And on top of it, a very symmetrical move. So coming down from 460, here you are. The equivalent of this move here is this, right here on this side. And then this bounce up in the middle is the equivalent of this. And then you come down one more time to form a higher low in the yellow. That's where SPY is right now. I mentioned at this point, coming up here, back up to 435, more or less, that SPY would be revisiting 418, 420. And here we are. So this is the last symmetrical landmark before all-time highs, this yellow box right here. And as a matter of fact, from right here to all-time highs was 13 trading days. So we're here. It's time. It's time for SPY to go. It's time for SPY to start climbing to all-time highs. This looks absolutely perfect. No complaints whatsoever. I am expecting SPY to find a bounce here and begin its climb to all-time highs. November 2022 until today, forming higher highs and higher lows to the upside, broke both of its macro patterns, the descending broadening wedge, the trend lines aren't here. Descending broadening wedge here, broke out of that, right here, retested, and then the ascending triangle broke out of that, and now retesting 418. Golden cross on the daily, and that's pretty much it. It looks amazing. It looks absolutely perfect. Perfectly symmetrical move here. Checking off the final symmetrical landmark to the downside, retesting 418, and now looking for the upside to all-time highs. Once again, from here, this last landmark here to all-time highs was 13 trading days. You could probably expect SPY is going to be very, very volatile the next couple weeks going forward. So that's it. That's it for SPY. Now let's get into AMC. And if you remember from the video I made a couple weeks ago, understanding fractals and market patterns, I covered this slide here. And I'm going to go over this really quickly again, just the highlighted part. before I get into the January 15th side-by-side, because it's fine to just look at this and I'm like, okay, it's the same. But why? Why is this the same? So I'm just going to read this again. The basis of fractal, and this is a fractal study here. So the basis of fractal revolution is the principle underlying chaos and other natural patterns, that of self-similarity. This means that the basic patterns are the same at any scale. They are the same at large macro scales as at small micro scales. The large is revealed by and grows out from the small. I'll repeat that. The large is revealed by and grows out from the small. Wholes mimic parts and vice versa. The bigger is revealed in the smaller. The bigger is revealed in the smaller. The bigger is revealed in the smaller. January 15th, 1 minute chart here on the left. This is the smaller, this is the micro. And on the right is the bigger, the macro, the weekly. So this is a 1 minute chart, January 15th versus AMC's macro, a weekly, 3 years of price action on the right. And I mentioned, every single day for AMC is January 15th over and over again. This is every single day for AMC, whether it's upside or downside, every single day for the past 3 years to give you this. This is playing out in every single one of these weekly candles on every single time frame to give you the full pattern that you're looking at here, which we're at the end. So again, the W here, first move up, the January squeeze, W. First move up the January squeeze, pull back, ascending W, pull back, ascending W into the June, your flag here, the flag here, and then downtrend. 4 touches on the top, 3 on the bottom, and then 4 touches on the top, 3 on the bottom, and then from that 4th point, you reject, you knife, and then you get the V. So rejection, knife, V. When this concludes playing out, when the V finishes playing out, you get your micro fractal break over here on the 1 minute chart, which is a gap up over the entire range. You can see the bottom of the wicks here, just gaps over the entire range. That is what we're looking for over here. We're looking for the macro fractal break. Once the V concludes, which will conclude with a weekly candle to roughly $14, theoretically, and I've been saying this since day one, AMC will gap up overnight to all-time highs above the range. Just the same way you see here on the left, the micro fractal break gapping over the entire range. The macro fractal break theoretically should be the same thing, gapping up over the entire range into our squeeze. The hell? I didn't even know I could do that. Just clicked on it. So again, the large is revealed by and grows out from the small. Holes mimic parts, the bigger is revealed in the smaller. The bigger is revealed in the smaller. January 15th, every single day to give you the macro perspective of AMC. 3 years of price action on the right, which we are at the end. Zooming into this a little bit more now, into the downtrend, here's the wedge. Here's your 4 touches up top. Here's your 3 on the bottom. Your 4 touches up top, your 3 on the bottom. From the 3rd bottom, form an uptrend, reject, higher low, and then reject again for your 4th. Over here, same thing. 3rd bottom, back up, reject, higher low, and then back up for your 4th rejection, the knife, and now in the process of completing the macro V, which once we do, ends with a gap up into our squeeze. This looks amazing. Now, getting into the actual macro perspective of AMC from IPO, here we are once again. So starting from IPO, your first run here, the green dot, your January squeeze equivalent, as you see it here, pull back, ascending W into your June squeeze, pull back, ascending W into your June squeeze, the yellow circle, the V shape, and then your macro break here, the blue box, the gap down, which brings you into the downtrend, which is a descending wedge. Green, red, blue, drop to the flat portion, played out, and then squeeze into a new macro. So macro break, green, red, blue, drop to the flat portion, play it out, and we're looking for a macro break into a new squeeze now. Again, the support of the descending wedge, we're running from the January peak down, and the resistance of it, we're running from the top of the V down. So there's your resistance, there's your support. In the current cycle, same thing. Top of the January move, there's your support, and top of the V, there's your resistance. The point at which they meet, support and resistance, the point at which they meet is your 3rd bottom, the all-time low landmark, from which you form an uptrend into your squeeze, and into your new macro break and your squeeze. And once again, AMC has now come down to meet this macro trend from IPO. Here's your first touch point. Here's your second and third bounces off of this trend. Your fourth and fifth bounces off of this trend. Break below, reject it. This is the original flat portion now. This trend was acting as resistance, the only time it was. And then your macro break, reclaim, retest, June squeeze, and then all the way back down to this trend once again, where we bounced off. And now we're in the middle of an uptrend, also the point at which support and resistance of the wedge meet. This looks amazing. Absolutely perfect. Now, so what we're doing now is we're starting with the macro, and we're going to be zooming in a little bit at a time to where we are on the tracking. So right now, this is the macro. Now we're going to be looking at the flat portion of January versus the flat portion of the current cycle against each other. So here's the flat. On the left is January 2021. On the right is the current cycle. Here you are coming down to your first bottom. Very choppy here, gap up. Come down to your first bottom, very choppy, and then you gap up from there. Then you get the double peak move, which brings you to your second bottom, which is a higher low in the daily. Double peak move, bringing you to your second bottom, which is a higher low in the daily. Got this little cup on the side in the yellow. And then from your second bottom, once again, gapping up into your tri-peak, where you have 3 pokes above the resistance, the yellow horizontal line, 1, 2, and then 3. And then rejecting from that yellow horizontal line to come down to your third bottom, the all-time low landmark. And here we are. So coming down to your third bottom, and it even looks the same. So coming down, here you are, your third bottom, all-time low. You get this pop, and then you get this pullback chop zone here before you get the move off, and then gap up your macro break. And then here we are, the move up, and then the pullback, the chop now. Once again, date range on this, from the beginning of the flat portion, January 2021, until the peak, 342 days in the current cycle from the beginning to where we closed on Friday, 323 days. We are 19 days now away from being one-to-one with the flat portion. This looks amazing. Absolutely amazing. Now looking at the EMAs, and this was probably something I said beginning of August maybe, on the way down here, that the 20 EMA would eventually meet the price action and that we would fight for the 20 EMA before gapping up over it. Here we are. The 20 EMA has now met the price action, and here we are fighting to claim the 20. This looks amazing. But just I'm pulling up the EMAs to show the EMAs are the same as well. So the 20s in the white, the 50s in the green. Here you are coming down to your first bottom. You get this double cross move, and then down to your second bottom. Over here, same thing. 20s under the 50, double cross move down to your second bottom. 2 crosses, 2 pokes above in the tri-peak right there. And then 2 pokes above right here. And then the 20 crosses the 50 to the downside one final time, coming down to your third bottom, where it eventually meets the price action, where you get this chop. So this is where we are. January, your third bottom, all-time low, up to the 20, fighting to claim it. Before you do, you gap up from there. That's your macro break. Here we are, fighting to claim the 20. 19 days away from being one-to-one with the flat portion. I showed this in my last video. Running this to the next OPEX peak target is October 31st. That puts us 8 days away from one-to-one, which looks great. So that's that. Now getting into the actual tracking itself on the micro. And this is what we've been tracking. I'm not going to really go through this, but I've been showing the tracking as it progressed. Here we were coming down. Here we were hitting the first bottom here, the equivalent right here, and then bouncing back up to the trend right here, looking for the double top. Here you are getting the double top here, and then looking for the double bottom with a question mark. And here was us getting the double bottom and the bounce off, and here we are today, right here. So, I'm not trying to be a dick, but I've seen a lot of people saying, oh, maybe we just skipped the 10-7 move, the 1070 move, maybe we're already past that. We're not. I've been tracking this shit for a very long time. There's no skipping landmarks. The next landmark is 1050 to 1070, one landmark at a time. It's not going to take the same amount of time to play out, and never will, but you can't just skip landmarks. That's not how this works. So, just be patient, It's coming. Like the move is, we're right there. There's nothing more I could say. I mean, I showed this in my stream halfway through the day. It was very apparent that we were not going to be getting this move. I'm expecting this move early next week. It's coming, and we have now triple bottomed $9, and each wick was a higher low. So 896 right here, 897 right here, and this was $9 bounced off. We're still looking for this move, 10.5 to 10.7. So a bounce up to 10.5 to 10.7, and then pulling back from there. And then more than likely we'll be forming support on top of this green line here rather than breaking below it. So this is going to be a very symmetrical move up to 10.7, and then you pull back and pretty much play all this shit out again except a little bit higher, like you see right here. So your double bottom, your double top, this peak is the middle of the move, and then you come down again, double bottom, double top, but slightly higher than the first part. That's what we're looking for. And more than likely, this is going to take time to play out, probably all next week, and then potentially into the following. And here's another perspective too. So coming down here, here is the top of the move as you see it here. Here's your double bottom. Here's your double bottom. And you're pretty much just fighting to break this trend. And yes, this is a descending triangle. It is a bearish pattern, but we're not breaking to the downside here. As a matter of fact, you know, just so, because I know someone's going to say, oh, you know, that's a descending triangle, that's a bearish pattern, and doesn't look good. You don't think we're going to come down? No, I don't, and I'll show you why. I'm just going to show this before I continue because I don't want to hear shit about that. Just looking at the tracking compared to itself, we're playing out the same thing. So here was the original move up. Here's your double bottom, and here you're fighting to break this trend. Again, call this a descending triangle, a bearish pattern. There's the break to the upside, and now the same thing. A very symmetrical move down here, and now a very symmetrical move once again. Here's the top of the move, double bottom, looking to break this resistance, and we're looking for the rest of this movement up, which theoretically would be taking us up to $14 to complete the V. And if you remember me saying, I don't know if I said this in my videos or Discord, I don't remember, but the V, you know, the macro V is more or less an inverse head and shoulders. And here you are. Here's your head, here's your left shoulder, and now in the process of forming the right shoulder to complete the V. So I figured I would just really quickly go over that because I don't want to hear shit all descending triangle bearish. We're coming down. No, we're not. So we're looking for the breakout of this, and this is going to happen early next week. Monday, Tuesday, I'm looking for this move to 10.5, 10.7 range, and then the rest of the price action looks like a retest on this trend. So 10.5, 10.7, come down, retest the trend, and then you're chopping pretty much the same way you were on the left side of this move. You're chopping over here the same way, just slightly higher, before you get January 15th, which is the end of the macro. This move right here, January 15th, you gap up, that's the end of the macro. January 15th when we do get this is the move we're looking for, will complete the V. This move will take us to $13, $14 range, which will complete the V, and then we're looking for the gap up from there, our macro break into our squeeze. Now let's go over some of the indicators. Bollinger Bands on the daily from IPO, and I've covered this already, I'm gonna really quickly do it again. From IPO, the Bollinger Bands have been pretty normal. All the way through from 2013, all the way through this, all the way until 2021, the January squeeze, where the Bollinger Bands open up like fucking crazy to the downside. At the same time, the volume spikes, and there is your first squeeze on AMC. The bands close up, and then once again in June, the bands open up like crazy to the downside again. The volume spikes. There's your second squeeze. They close up again all the way through the macro until recently the bands have opened up again to the downside, and the volume is spiking again at all-time high levels right before we get our macro break looking for our squeeze. Call this a glitch, call it a coincidence, whatever the fuck you want to call it. It looks amazing. It's more confirmation. Getting into the RSI, OBV, and volume now. We'll start with RSI, or actually the macro. So again, this is the weekly perspective of the macro up top. Here is your January equivalent squeeze, here is your June, here's your V shape, and then the descending wedge. And here's a new macro, January, June, V shape, descending wedge. So RSI on the weekly is still sitting at 30, still oversold, plenty of room to the upside. This looks perfect, we're looking for a squeeze, so you know, having this much room to the upside, On the weekly, RSI looks great. OBV is at all-time highs for AMC. Mentioned this last time, increasing OBV on AMC is a great sign. Very flat back here. January squeeze you leg up on OBV, June squeeze you leg up on OBV. And from $400 all the way down to $7, OBV has just been hovering right under all-time high levels. We have this descending trend on OBV, which we broke out of, retested twice, confirmed, and a new all-time high on the weekly OBV, cooling off as the weekly candle we got this week was red. Relatively low volume though, so it looks good. And once again, the volume is at all-time high levels as well, matching the January and June 2021 equivalents. And that's it. Looks great. Nothing else to say here. Here's your macro trend, retesting, looking for a new macro and a squeeze. Really quickly, again, I figured I would show this. Here's the descending wedge, and all of your halts are coinciding with the top resistance of the wedge. So here, 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 here's the breakout. Halt it again to retest, and here we are. I wanted to show that because that is the macro trend of AMC, is this descending wedge where we got halted at resistance every time. And here's the Fibonacci spiral, running this from IPO, your first touch point, your second touch point right at the beginning of the original flat portion, your January squeeze, your June squeeze, and all of the halts that we've seen, which have halted us at the top of the descending wedge, have also been halts at the top of the resistance of the Fibonacci spiral. So halted here, halted here, halted here, halted here, and then halted here to come down to retest. Here's the breakout of the spiral, and now retesting, halting every single time we were pushing resistance. Resistance of the spiral is also resistance of the descending wedge, is also resistance of January 15th trend. This trend right here, all these rejections were halts. So halt here, halt here, halt here, halt here. And once again, these halts are not malicious. These halts are not them or they, whatever fucking pronoun you want to use, trying to kill the squeeze. The halts are to preserve the pattern, to make sure the macro plays out properly. Once we get the V, the conclusion of the V, we gap up into our squeeze. Potentially we see halts. Maybe we don't. If we do see halts, there'll be halts up instead of down. This has actually worked pretty beneficially for the market makers, or whoever's doing this. The halts that we're seeing, yes, it's preserving the pattern, but it's also conditioning retail to expect downside when we see halts. And when we conclude the V and gap up, that's just not going to be the case. If we do see halts, they will be to the upside. So that's that. I think I covered everything for AMC. It looks amazing. Every chart, every possible way you look at this, it looks amazing. January 15th side by side. The macro perspective from IPO, retesting this macro trend, breakout of the descending wedge, the flat portion, it looks amazing. Movement looks great. The EMAs look great. The landmarks are perfect. We checked off everything. We're in the middle of the uptrend from the third bottom now. Date range, we're pretty much 1-to-1 with the January flat portion. The tracking looks great. We're looking for this move to 10.5 to 10.7 range. Expecting that early next week. Bollinger Band, coincidence, glitch, whatever you want to call it. This looks amazing for us as well. That's only happened twice. This glitch or whatever the fuck this is has only happened twice on AMC from IPO. And it was January 2021 while we were squeezing and June 2021 while we were squeezing. Right before we squeezed actually is when this happened. So that's that. The volume is at all-time high levels. Starting a new macro here. Here's descending volume all the way through the macro, and now picking up again, already at January and June 2021 levels, as we are about to go into the next macro. Expecting the volume on the squeeze is going to be absurd if we're already at these levels that we saw in January and June at all-time low levels. Weekly OBV is at all-time highs. RSI is still oversold on the weekly. The Fibonacci spiral looks amazing. Retesting the Fibonacci spiral here, halted every single time we hit resistance. And that's it. Really quickly getting into GameStop. Figured some people would appreciate this, me covering GameStop really quick. So I covered this once before. I'll cover it really quickly again. every macro on GameStop starts or ends, however you want to say it, it doesn't really matter, begins or ends with an all-time low landmark, very similarly to AMC. So here was the original all-time low landmark of GameStop. Here's the V out of it. This break above this yellow trend is your macro break. Into your squeeze, your all-time highs. This would be the equivalent of the V. And then you get these two touch points here, lower highs, and then into the downtrend. And over here, just all the way through the downtrend, you get this W here, and then you fall down to another W, which ends with an all-time low landmark, where this yellow trend is your macro break line, just like you saw back here. So you V out of the all-time low landmark, you break above that yellow trend, which is your macro break line, into a squeeze. Over here, same thing, into a squeeze. There's your all-time high, the V shape, your 1-2 touches, lower highs, into the downtrend, your first W here, and then that falls off into another W, which ends with an all-time low landmark, which is where GameStop is right now. GameStop is at its all-time low landmark. Not that 1344 is all-time lows for GameStop, but I'm saying the equivalent of the positioning on GameStop is all-time low landmark that you see here. This is the beginning of a new macro into a squeeze, all-time low landmark. That you see here, the beginning of a new squeeze, all-time low landmark right there. That's what GameStop is checking off right now. And I'm not even saying the bottom's in. Potentially it is. Potentially there's another dollar or two to the downside. It doesn't really matter. When the bottom is in, GameStop is going to V out of this very fast. Very, very fast, very volatile to the upside. And once you break this trend here at $24 for GameStop, that is your macro break. Like I mentioned this in my last video, you know, whether it comes down lower or not, it's very possible it does. It's very possible it doesn't. When you actually hit the bottom, you V out of this very fast. Previously, this was very fast. You V out of it, and then looking for the macro break, this yellow line here, pretty much just showing that AMC and GameStop are synced up. And it looks amazing. GameStop will be squeezing too. It's probably going to be at the exact same time as AMC. And that is pretty much it for the video. I think I covered everything about a half an hour in. Yeah, I mean, just look at it, would you? Just look at it. I really don't have anything else to say. This chart says everything that you need to know. This chart and this one right here, this is all you need to know. Looking for upside next week. You know what? I'm going to go so far as to say I'm 100% sure we'll be seeing upside next week, an uptrend. I am 100% sure that AMC will be uptrending next week. How does that sound? I feel like that sounds pretty good. I'm 100% sure that AMC will be uptrending next week. Whether we get the full move, the January 15th move or not, who knows? But we will be uptrending next week, and we're looking for this landmark still, 1050 to 1070. The tracking looks amazing. Macro, micro, whatever the fuck you want to look at, it looks amazing. Indicators, market synchronization, S&P 500, other meme stocks. Looks amazing. No complaints. That's it for the video. Half an hour in, upside. 100% sure. I don't know if that's arrogant. Maybe it is, maybe it's not, but I'm 100% sure we're seeing upside next week. So that's it for the video, and I'll catch you guys next week with some update videos, potentially live. We'll see.